Crypto never sleeps, and neither does the innovation driving it. In just a few years, we've seen meme coins explode, NFTs go mainstream, and entire financial systems rebuilt on the blockchain. But 2025? It's shaping up to be the most pivotal year yet. The market is maturing, regulations are tightening, and new tech is rewriting what's possible. The question is, are you ready for what's coming next? In this episode of Crypto Made Simple, we're revealing 5 bold predictions for crypto in 2025 that could shape the future and potentially line your wallet. From emerging sectors and new coins to game-changing trends and under-the-radar moves by whales and institutions, we're breaking it all down so you can act before the crowd. If you're serious about staying ahead in the world of digital assets, this video is your roadmap. So get comfortable, take notes, and be sure to like, subscribe, and hit the bell. Because what happens in 2025 could define the next decade of crypto wealth. Let's dive in. 5. Real-world assets, RWAs, will explode in DeFi. 2025 is becoming the breakout year for real-world assets, or RWAs, in crypto. For years, DeFi has been criticized as being too self-referential. Most assets were derivatives of other crypto tokens, wrapped tokens, synthetic coins, or yield-bearing staking assets. But now, with more regulatory clarity and institutional infrastructure, RWAs are bringing the outside financial world on-chain. We're talking about tokenized versions of US Treasury bonds, real estate equity, invoice receivables, and even carbon credits. These assets are being brought onto blockchains using tokenization platforms like Centrifuge, Ondo Finance, and Goldfinch, and they're becoming critical sources of yield in a post-zero interest world. MakerDAO, one of DeFi's oldest protocols, now backs billions of dollars worth of DAI with tokenized real-world assets like short-term US debt. And it's not alone. Protocols across Ethereum, Polygon, and Avalanche are racing to integrate with TradFi institutions to offer regulated and compliant on-chain securities. If you're an investor, 2025 is the year to look beyond high-risk altcoins and into protocols that provide exposure to RWAs. These are projects with long-term value propositions that could withstand even the most brutal bear market cycles. As more assets become digitized and more financial institutions tokenize their balance sheets, the protocols facilitating this transformation will become the infrastructure of a trillion-dollar ecosystem. 4. Layer 2 networks will outperform Layer 1s. In the past, every bull market brought with it a new wave of Layer 1 chains, Ethereum competitors with promises of lower fees and higher throughput. We saw it with Binance Smart Chain in 2020, Solana in 2021, and Avalanche soon after. But in 2025, the shift has been monumental. This time, it's Ethereum's own Layer 2s that are leading the innovation, user growth, and profits. Layer 2 solutions like Arbitrum, Optimism, ZK Sync, Base, and Starknet have evolved from experimental rollups to fully functioning ecosystems. They process thousands of transactions per second while inheriting the security of Ethereum. These networks have slashed gas fees, made DeFi accessible to small investors, and allowed developers to build complex dApps without worrying about congestion or high costs. The alpha here is this. The next Solana-level returns may not come from competing Layer 1s, but from the protocols built on or integrated into Layer 2 networks. Whether it's infrastructure like bridges and oracles, or apps like DEXs and lending protocols, the value is being created on top of Layer 2s. If you're investing in 2025, don't just chase new chains. Look at who's building the roads on Ethereum's next layer of scale. 3. AI x crypto will create entirely new wealth models. The convergence of artificial intelligence and crypto is no longer speculative. It's a reality shaping the future of Web3 in 2025. In the past year, we've seen an explosion of projects combining blockchain infrastructure with AI-powered functionality. But what's coming next is even bigger: decentralized AI agents, tokenized data marketplaces, and autonomous DeFi participation. Projects like Bitensor are leading this charge. Bitensor is building a decentralized network of machine learning models that can train and validate each other, and earn tokens in the process. Ocean Protocol is building data marketplaces where you can sell datasets for AI training without sacrificing privacy. Fetch.ai is developing autonomous economic agents that can negotiate, transact, and coordinate services without human input. These aren't just white paper dreams. They're real, functioning systems with active use. Here's where the opportunity lies. Crypto enables decentralization, transparency, and tokenization. Three things AI desperately needs to scale ethically and efficiently. Investors who understand this fusion early are uniquely positioned to benefit. Tokens powering decentralized compute networks, AI-powered DeFi protocols, or even governance tokens for decentralized AI cooperatives will represent entirely new asset classes. AI isn't just automating tasks, it's beginning to participate economically. And crypto is building the rails for that participation to be secure, fair, and global. 2. Stablecoins will reshape finance in emerging markets. If you want to see the real-world use case for crypto, look at the developing world. In regions where local currencies are collapsing and banks are unreliable, stablecoins are becoming the new lifeline. In 2025, the trend has reached a tipping point. In countries like Argentina, Nigeria, Venezuela, and Turkey, stablecoins like USDC and USDT are seeing adoption not just for trading, but for payroll, remittances, and daily spending. When inflation eats away your savings every month, holding your wealth in a stable digital dollar becomes a survival strategy. Crypto rails offer something that traditional financial systems in these regions can't: borderless, low-cost, censorship-resistant access to global currency. All you need is a smartphone and an internet connection. But this revolution isn't just about holding value. It's also about using value. People are now paying rent, buying groceries, and sending money to relatives abroad using stablecoins. Small businesses are accepting them. Freelancers are getting paid in them. As CBDCs remain experimental or overly centralized, stablecoins are quietly winning the race on the ground. This is where massive investment potential lies. Wallet providers like Celo, payment layers like Ramp and Transact, and stablecoin issuers with regulatory clarity are going to be critical infrastructure in this global movement. Investors should also pay attention to protocols integrating with telecoms and mobile money platforms in the global south. These integrations are the key to onboarding the next billion users, not into speculative DeFi, but into a stable, usable financial system powered by crypto. 1. Bitcoin will emerge as the global store of value. And finally, at number 1, Bitcoin. It might sound predictable, but Bitcoin in 2025 is entering a new era. It's no longer just digital gold. It's becoming the hardest monetary asset the world has ever seen. And the demand is accelerating across institutional, sovereign, and individual levels. The approval of multiple spot ETFs in the US, Europe, and Asia has fundamentally changed the game. Pension funds, insurance companies, and even sovereign wealth funds now have a regulatory green light to allocate to Bitcoin. Corporate treasuries are hedging inflation by adding BTC to their balance sheets. And in countries experiencing capital flight, Bitcoin is becoming the de facto exit ramp from broken monetary systems. But beyond speculation, Bitcoin is becoming infrastructure. The Lightning Network has matured significantly, with fast, cheap transactions being used in emerging economies. Developers are building decentralized identity layers and even basic DeFi products on Bitcoin's base layer using tools like Taproot and Ordinals. This isn't a static store of value, it's a programmable one, and it's starting to rival Ethereum in developer energy. The price alone doesn't tell the whole story. Bitcoin's role in the global economy is evolving. In a world where governments print money without end and trust in fiat currencies erodes daily, Bitcoin offers something nothing else can: a fixed supply, open access, and absolute transparency. If you're investing in 2025, betting against Bitcoin isn't just risky, it's missing the foundation of the entire crypto economy. The future doesn't wait, it's already unfolding on the blockchain. If these predictions opened your eyes to what's coming in 2025, Make sure to like, subscribe, and hit that bell, because we're just getting started. Smart investors don't chase headlines. They prepare for trends before they go mainstream. Whether it's AI-powered crypto tools, mass adoption of DeFi, or the next big altcoin breakout, you now have a clearer map of where the money could flow next. Which prediction got you thinking? Do you agree? Disagree? Or have your own bold forecast for 2025? Drop it in the comments. We're building a space where ideas spark opportunity. Want deep dives on topics like real-world asset tokenization, institutional adoption, or hidden gems flying under the radar? Let us know. This channel is about giving you the edge before the crowd even sees it coming. Thanks for watching. And remember, in crypto, being early isn't luck. It's knowledge, timing, and courage. See you in the next one.